Hello and welcome to the RSQ Labs Chat today. And today we're going to be talking with Anish Mohammed, who's one of the founders of the RSQ Labs. And because it's the start of 2021, and because of all the price volatility, we're going to talk about price and cryptocurrency today. So we've seen Bitcoin, it went up to 41, I think 41 plus $1,000. The whole cryptocurrency market cap was just touching 1 trillion. And now it's surged back again. So Anish, can you maybe give an interpretation of what's happening perhaps with this bull run? And are we still in a bull run, or are we going back into a bear market?
Thank you very much, Jillian, and a happy new year. This new year has been pretty good. I would say it's a continuation of a bull run from the end of December has been continuing for BTC, and it kind of has slowed down a bit. The way I see it is like there are a whole bunch of events that are happening in the ecosystem that's given cryptocurrencies a very good opportunity to grow. So, the multiple things that are happening. I would even put COVID in the bucket. So the economy actually is in a state where there are not many assets in the market that is giving good yields for any investor. So there is a large amount of money that's sat there looking for yield. And crypto apparently looks like one of the asset classes that's actually providing yield. And this has actually gotten a bit of interest in various traditional hedge funds who haven't had the exposure to crypto. So the Galaxies of the world, and given they got very good results from the investment early on, and we should also note that BTC at one point in time went all the way down to close to 4,000. That's a 10x. So that really shows up in everybody's books. It is, even though it's an anomaly in one sense of speaking, it would definitely, tilt the balance in terms of, people's perspective on BTC as an asset class. I mean, you could think of it as an asset class as a higher risk and volatility, and also as a very as a positive growth prospect. As you saw, literally this sudden increase in the inflow of all the asset managers into crypto ecosystem essentially meant that there was going to be a steep increase in prices. And then
May I just ask you there,
sure.
Sorry, you said with the investment, was it in institutional investment or retail investment at this stage, or both?
There is both, and the largest chunk that's visible seemed to be institutional. So, the fraction between institutional and retail. So if we were to go back in history and probably look at 2017, the fractional distribution between retail and institution, that was much more retail than institutional. Now, if you look carefully, what you see is more institutional and less of retail.
So institutional piles in. We have Grayscale, we have MicroStrategies, a lot of high profile companies coming in. Has that stopped now? Because we had this very seriously upward level up to 41,000 at one stage, and now I think today it's down to 33. So what do you think is going to happen next, or how do you account for what's happening?
So a couple of things to notice about Grayscale and other people. So Grayscale actually has this index, and sometimes you can actually see a difference in the valuation of the index from the valuation of BTC. This happened for ETH as well. So there was a 20% at one point in time, and on December 26th, if I'm not mistaken. So what that means is there are people in that class, in that asset class as an investor who thinks that the price is actually going to go down, and they are taking an exit.
Okay, what about you? I suppose if you bought it at 20 and exited at 40, that's not bad.
Yep, absolutely. So, you have a huge sell pressure when the sell pressure comes in, and when you actually, go past a particular place where, firstly, there is one part we need to recognize. All institutionals don't have unlimited amount of funds. They raise a fund and they deploy the fund. When the fund is deployed, it's kind of bounded. Typically speaking, when you talk about retail investors, they don't have institutional kind of a bound. They invest whatever they could, and there are more investors coming in, and it's a continuous flow, whereas institutionals are typically discrete flows. So it's like they make big chunk investments. So, when the big chunk investments are done, it pushes the price up. When they come to the equilibrium, when the number of sellers and the number of buyers, sellers are higher than the buyers, and the price starts to drop. And I believe this is pretty much what has happened. And there's this, equilibrium that has happened in the traditional, institutional classes, as in like asset class, not having enough of, buy, and there is more sell happening. So it's just sliding down a bit.
What about, or is it not surprisingly that the only coins who don't appear to have dipped in this most recent, I won't call it a dump, but a downward trail, are privacy coins like Monero and Zcash. So is that a whole race against censorship, or what do you put that down to?
Yeah, this is a very interesting thing that anybody who has been interested in privacy would have noticed. So I have to admit, I have some interest in privacy and privacy coins. So I've been watching this space for a while. Typically speaking, most privacy coins, at least, whenever there is a bit of a need for privacy in that sense, the daily volume is very close to the total volume in that sense. And I don't know if you could really classify Tether in that sense, in that bucket, but Tether would be an example where you actually have like the total daily volume is like four times the total volume. So there is this, a reasonable requirement for people to actually use coins that actually provide privacy. And there is also the other side. I know this is kind of orthogonal to your question, but I thought I should mention it. So if you are doing DeFi, one of the challenges in doing DeFi is anything that you do using a smart contract is visible to everybody else on the network or on the blockchain, right? So say, for example, you wrote a smart contract to do some trading, some arbitrage. So now I saw some movement and some like large numbers moving around. So everybody could see it underneath the scan. Now I could literally write a smart contract. I could write a smart contract, or I could go write a subgraph on the graph and deploy it on the smart contract you have, and I look for the events that are triggering it. Now I could then create a smart contract to copy your trade. So in that sense, now what is happening is, if you were like an institutional trader, you definitely wouldn't appreciate that kind of thing. Or even if you are a whale, even, you wouldn't appreciate it, because your trade, you put a lot of effort in, you create the trade, and you're trying to do that in addition to the fact that somebody else is having a free ride, plus there is a challenge of the depth of the market being taken away from you. So, if I copy, then somebody else copies, and suddenly 5 people come in, the total depth in the market and liquidity disappears in no time. So there is some interest in that sense. And there is also this interest because the regulation that is actually there is becoming tighter and tighter. And most of the people who came into crypto historically, so this is me talking historically from ski.crypt kind of thing, and the cryptography mailing list. Ski.crypt was prior to cryptography mailing list. This was a Newsnet group where everybody who did cryptography used to hang around. When Bruce Schneider's book was published, that came out there. I mean, that's like the FTP link came out there. And similarly, those conversations happened there. They were all people who described to this cypherpunk kind of ethics, which is like, there is this effect of cryptography on humanity as such, and we should try get the best effects. And they typically don't agree to privacy constraining privacy constraining regulations. So I would not be surprised that, given a good chunk of the early adopters of crypto have come from that population, they would still be interested, and the demand for that will remain more or less higher compared to
like the OGs. The OGs
yes,
are going to be in there.
Yes.
So you mentioned Tether. So stablecoins, they're obviously increasingly of interest. Now, while a stablecoin is very cool in the sense that it's stable, in a volatile marketplace, you don't really want to be in a stablecoin, do you? You don't want to get your like for like if you could get something that's going to pop through the ceiling.
Yes and no, right? This is the question for people to think about. Like, the question here is like, in markets, anybody who's in a market would always say volatility in a market is good. If you're a trader, you would say volatility in a market is good. But if you are a person who just wants to do transactions, what is important for you is stability. So if you are thinking about cryptocurrencies as a medium of value transactions, that's different from a store of value or speculative class of assets, right? So if you think about Ethereum and you get paid in Ethereum, you would like to have stability, because it's like you are only going to be paid in Ethereum. You are paid 10 ETH, right? So if ETH goes up, it's useful for you, but when it goes down, and the probability of both of them happening is more or less the same, right?
So have the altcoins then pretty much followed Bitcoin? Ethereum went up, it went up to, I think it was 1,200, 1,300. It's now just hovering over the 1,000. That's kind of expected, isn't it? The altcoins tend to follow what Bitcoin does?
I would probably not call Ethereum an altcoin, and the correlation between
that's good correction. I'll take that. Yes. And may everybody who works at Ethereum, I apologize.
No, I mean, I am as guilty as everybody else from the large Ethereum team. It's just like I'll admit I have some interest. I happen to be one of the original reviewers of the orange paper, so I still spend some spare time with the Ethereum Swamp team. So I have affiliations and I know the people. But the way I was saying is like Ethereum, when the ICO of Ethereum happened, people who had BTC entered into Ethereum. So if you think about all the early investors in Ethereum, they all had BTC. Okay, so essentially this is how you should think about it. You have a bunch of assets that are there, and price of one of the assets goes up. So now you have the liquidity to do things, right? So if BTC shoots through the roof, then what happens is you have the liquidity to actually buy back a whole bunch of Ethereum, right? And also, whenever there is BTC coming into the ecosystem, when increase in price of BTC happens, the total volume of cryptocurrencies increases. Now, as you might already know, a lot of BTC is wrapped and put into Ethereum. So when you wrap that and put into Ethereum, Ethereum needs to have the liquidity. So the only easy solution that can happen is the price to go up. It's a question of supply and demand. So the moment you actually have this wrap BTCs entering Ethereum ecosystem, prices go up, total allocation goes up, everything is it's an upward pressure, right? So, there is, this is to be expected. The people who are early invested in Ethereum have BTC, they have a significant upside, they have the ability, they will definitely do what's expected. Then increase in price again increases the volume required because of BTC thing. Tether again, another upward pressure. All this upward pressure literally pushes Ethereum upwards. That literally will reflect in what we see. I mean, it's expected.
Okay, so apart from me making that mistake by calling ETH an altcoin, what about the altcoins and the ones that are following down behind them? Are they benefiting from this upward trend, but in general, or is it kind of mixed?
I would say the general trend is upward, but there are a lot of them that actually have not got the benefit. So I think the way I would describe it is like if you are in a stage where you are in the early phase of an ecosystem and you are just building your ecosystem, and you could call any of them as altcoins. I don't know what to call that. Altcoins is a very how would I say, charged word in that sense. So loaded word, if I might put it that way. Yeah. So it's like, let's take Horizon for example, just for the heck of it, one of the privacy preserving coins. Zcoin became Horizon. So in one way of thinking about it is like, okay, you know what? They have been around. They are in a state where they are stable or decreasing the number of wallets. Then the benefit they might have is not that high, even though they had a bit of a surge and then a bit of come down. So this is what it means. So it's like if the ecosystem is actually in the growth phase, the number of users are increasing. If crypto ecosystem actually has a surge, the surge typically takes every coin upward. But if you are in a downward surge, effectively what is going to happen, this is a FOMO thing, right? You are sat on think of you yourself as actually going down a street where, you start walking down a street and you see more and more shops closed. You will trace back and go back to another street where there's more shops open, right?
Yeah.
So literally that is happening. So Ethereum, imagine Ethereum to be one street, Polkadot to be another street, Cosmos to be another street, and the ones that are doing really well to be streets with more shops. And you can think of this coin that has kind of gone past its prime, as with the street with less shops open. So as you walk across the street, you suddenly realize, I am missing, right? As in and that clearly drives this exodus in that sense, and that definitely will reflect as a downward trend.
We know how news also impacts coins directly. So it's, because they're so much more tightly linked than anything else. Do you have any views on the news released this week that Dan Larimer is exiting Block.one, obviously the co-founder of EOS? I think the price has dropped, which would be expected. But do you think have you any input on that?
I mean, I have to admit, EOS is a very, very large team, and they have been around for a while. EOS, as a project, they raised more than $4 billion. They're one of the few projects that actually did very good treasury management. So they had a large amount of capital to deploy. So in addition to actually being able to build the ecosystem and fuel the ecosystem, they were able to do lots of things. So since 2017, since they have been this long, the impact that somebody who is the CTO and one of the founders would have had would be more in the initial phases. Like going forward, like it becomes smaller and smaller. So it's like, let's look at, say, Ethereum, right? So if you think about Gavin Wood leaving Ethereum, everybody would have said, if that happened in a slightly different way, people have thought, oh yeah, it would have a massive impact. If you look at it now, meaning it didn't really change the view of Ethereum in that sense. So I'm comparing apple to
do you know what the point you're making is very valid. You're saying it's now that these coins have reached a level of maturity, it's less the leaving, it's more what the founders do afterwards. So Gavin Wood, Polkadot, wow, it came in at the middle, launched in July, whatever, came in the middle of the top 10. So we'll be watching Dan Larimer to see what he launches next. That would be the more interesting bit rather than okay, that's cool. I want to ask you then, I say lastly, but it's still a big topic, DeFi. Now, DeFi it's been the summer of DeFi. It's been crazy. There's more money going into it than anything else before the big surge. What's going to happen now with DeFi? Is it going to continue on? Is it slowing up? Does the price matter with DeFi or not?
Okay, so I'll start with the last bit first. Okay. So the question about price. So, the thing about DeFi is most of the transactions require for them to be financially efficient to give people returns for gas charges to be low. So when price of Ethereum goes up beyond a limit, most of the people who actually had transactions which are smaller will no longer be able to compete. So, when Ethereum price is like 1,000, 1,200, the gas charges will be pretty high. And when the gas charges are pretty high, protocols will really stagger, queues, go up. So all the problems that you actually have in DeFi for transaction costs will really shoot through the roof. So that is going to be an interesting challenge for DeFi. In fact, Hayden Adams, if I remember his name correctly,
founder of Uniswap.
Yeah, he actually mentioned this is going to be a big problem for us. It's like we need to have efficient layer 2 optimization so that we can actually reduce the total amount of charges that DEXs have to pay for this. So he's just one observation. So this is pretty much what is happening. On the other side, looking at DEXs as a whole, DEXs in the last 10 months in DeFi in the last 10 months have been in a very good state, as in like they've been on the upsurge. The largest chunk of them has been decentralized exchanges. So you could actually literally see that. Now, prior to that, decentralized exchanges always had less than 1% of the total volume that was going through other exchanges. But it is that fractional distribution has shifted. So, do I expect DeFi to have a say in the larger ecosystem? Absolutely, yes. Because a lot of the instruments that DeFi has created can't really exist in a traditional CeFi ecosystem. And the transparency and a lot of those nicer characteristics, the governance, the transparency, all those things doesn't exist in CeFi. As in, like, you give your money to a bank, you put deposit into a bank, you never know what the hell is happening.
No. Somebody said to me recently, I was interviewing them, and they said the way that the governance coins in these DeFi projects and the protocols, they're given out like just as a reward. They're like candy, but all of a sudden they've achieved a value of their own, and a quite a significant value. And that person posited that it was a new way of getting around creating new coins that have to go through an ICO.
I mean, yes and no. It very much depends on this, right? Like, if you really want to have a game theoretically sound governance mechanism where the security margin of the protocol is secured against arbitrary malicious actions of anybody in the ecosystem, having a governance token will help quite a lot. What I mean by that is, like, imagine you got a whole chunk of Uniswap governance tokens. You have an interest to make sure Uniswap works without a shadow of a doubt, right? And the classic example is Yearn. Yearn, when it happened, like, there was only like 20, 30, a small amount of governance tokens. The tokens was actually issued to make sure that the voting mechanisms really worked. At the same time, there is also the other side. The governance mechanisms that are being applied on this DAOs, in that sense, are not the optimal set in that sense. What I mean by that is, like, they don't actually enforce things like quadratic voting, where you actually force people to really show their preferences and then go ahead and do something about it. They just randomly get around creating protocols, put some governance tokens, and the governance tokens get used for things. Did I answer that? Or?
You did. And the initial point too as well, that was actually, I'm going back 2 points that really jumped out at me about the DeFi and the price. If the price goes up, it's counterproductive to DeFi because it pushes people out of the marketplace. And the beautiful thing about decentralized finance is that it democratizes access to people to financial, just to finance. So whether it's they want to earn interest or get loans, I think that's a really important bit. I probably went a long way around. Finally, staking. Staking is huge now. What is it, and what does it offer people?
Okay, so you were talking about governance, and staking. The easiest way to describe staking is in a governance perspective, and I will explain that to consensus as well. So imagine, in a traditional family, you have the parents, they have their stake in the whole thing. So, they decide what the family does, right? So these are the people who stake. As in, they put in the effort, they do everything to have family together. So if they want to watch a movie, watch TV, the stake for the parents are typically the highest. This is typically what staking is, right? So, they get the vote and they get to veto things. It's like, probably who was cooking dinner has highest ability to veto what is going to be served, right?
Yeah.
And that's probably the easiest way to describe it. So this is essentially staking. Staking can be applied in multiple ways. Staking could be applied to provide consensus. So going back to what I was describing, if a protocol needs to succeed, one of the things you need to do would be actually making sure that everything that appears on the protocol is actually true. So the way to do about it is, like, I say, okay, whatever Jillian publishes is true. I stake on it $100. So, I am putting my money on your reputation. So if you publish something wrong, then my stake gets slashed, my 100 becomes 50. and people who stake against you who say, oh, I don't really believe anything Jillian says, so I'm going to stake another 100 against her. So they
Mean things. Don't like them.
So this is typically what
it's the
staking.
public voting, yeah.
Yeah, yes, absolutely. So everything has to have both sides. So this is typically how staking works. The thing that has actually happened about staking is like Ethereum in Ethereum 2.0 from proof of work have moved to proof of stake. This essentially meant that you need to actually participate in staking to get the mining reward. And you need to have at least 32 ETH to actually enter the mining space. And this is one of the other reasons that actually drove the Ethereum price up. So there was a sudden need for people. Until recently, you just bought hardware, mostly GPUs, and you plugged it in and you do continued mining Ethereum. And suddenly what has happened is you needed to get Ethereum, at least 32 ETH.
Oh, I didn't realize that.
Yeah.
Ah, that's the so you need 32. Why 32? Was it a value or is it an arbitrary number?
It was an arbitrary number, and I don't know exactly why that was decided for 32.
Yeah.
32 was low enough and high, low enough, but yet high enough for the threshold. And it's almost 3 billion worth of US dollar worth of ETH that's already been staked. So this meant that's a huge shift from other places to staking. So when this happens, as I said, the supply versus demand, the overall supply being more or less bounded, and a chunk of Ethereum disappeared from the ecosystem. So that drove the price up.
You mentioned, obviously with traditional mining, with proof of work, you bought the equipment, you plugged it in and you sucked all the electricity out of your local region. With the proof of stake with Ethereum, is there competition? Is it enough to have 32 or does everybody with 32 ETH at stake, do they all get rewards?
The very least you need to have 32. You can put more if you want in that.
So the more you have, the more likely you'll get the rewards.
Yeah, I mean, it depends on how you do this. It's like you can have, like, imagine you have, the 3200 in that sense. You could actually do 32 into 100. You have 100 possibilities of that happening. And you could, look at optimal sizes for the basket and then stake it in different ways.
Okay. Wow. So just to close up, because it's been a very interesting roundup of what's happening with coins this week, with what they're doing. We're down to say it's just today down to 33. What do you expect over the coming weeks? Have you got any, not predictions, but have you got a feeling for where the market might go? Would it correct or?
My expectation is a bit of correction, not upward, probably downward. In the immediate future, because it's like if typically speaking, there is a correlation, even though everybody says there is no correlation between traditional markets and crypto market. That's not actually true, because think about this. So if you are a BTC miner, you are going to go to a traditional market to get some investment to buy some hardware, and that hardware is deployed as a miner and you make money, right? So you have an immediate bridge between the two. So that is immediate arbitrage you have. So if the economy is doing very well, what that means is like, okay, there are other asset classes where this could be distributed. The total demand on crypto is going to come down. So if in the US, when Biden takes over in less than 2 weeks' time, if all the signals are in the right direction, and there are a couple of forecasts that have come out, all of them seem to indicate that the US economy is going to go in the right direction, then literally, there will be a whole bunch of low-hanging fruits that are there in the traditional asset market that all the traditional institutions will be interested in going after. So, given the allocations, they will reconsider how much they should actually put in. And the same applies to retailers as well. The retailers, I would expect, at least some of them have, a balanced basket. Effectively, what that means is they put a bunch of money in crypto and a bunch in other things. So this is the rebalancing will happen. If the rebalancing happens, I expect a bit of correction if the US economy is going to go in the right direction.
Okay. And I guess, like most people in this space who believe in this space, there is this feeling that, Bitcoin and the markets will grow, but it'll be a stagger. It's not going to be like
Yeah.
to the moon type stuff. And until it finds it's kind of like its true worth, I think it's hard to know. I mean, I think JP Morgan, Chase came out, I don't know, a commentator there said 165,000 was, I think, the true value. It's hard to know what it's going to be. And I know that actually, I think the Winklevoss brothers have said is it 400,000. And of course, John McAfee famously said, if we can get to $1 million this year, he was going to cut off his you-know-what-y. I hope he hangs on to that. So yes, I think there is a true value, and we wait and say, you know, where it'll stop, it'll just going to be hopefully here as opposed to here. But interesting times.
Absolutely interesting times. I hope John McAfee keeps his word.
So do I. Well, he's in a jail in Spain at the moment, waiting to be extradited to the US. So hopefully,
Wow. Okay.
Hopefully he doesn't hopefully gets released or whatever. I don't know. I wouldn't wish that on him. The US is very tough on tax, isn't it? And tax avoidance, and they have different laws, different criminal, different imprisonment criteria, I think.
Yeah. Anyways.
So wow. Okay. Well, thank you so much for today. Yeah, that was very interesting. Thank you, Anish. So I think we've learned a lot. And the one thing that stands out for me, it's interesting, is that DeFi doesn't need high prices because it disenfranchises people from participating. And that's the big excitement about DeFi, that it's the democratization of access to finance for people who don't have too much money. So so it's an ill wind that blows no good, as they say. And we'll see what happens when we next meet.
Okay. Thank you very much.
Thank you. It's Anish Mohammed, who's one of the founders of RSQ Labs, with me, Jillian Godsil. Thank you.